Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, November 18, 2010. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London, 12:30 in Bermuda, and 10:30 in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. On this day, 32 years ago, in 1978, in Jonestown, Guyana, over 900 adherents of something called the People's Church followed their leader's exhortations, Jim Jones, and committed suicide. Mr. Jones shot himself in the head. The others drank some sort of cyanide-laced Kool-Aid. Also in the U.S., some of the economic indicators are coming out pretty well today. The unemployment statistics showed only a 2,000 number drop, or I should say increase, in those unemployed during the month of October, which was far less than people had expected. Also, the leading economic indicators released by the government showed a sharp increase, as did the Philadelphia Factory Index, which jumped 22.5 points. Also, of course, today is the General Motors IPO. GM is currently up about 6% from its opening. I think it opened at $33 a share. We also had a press release yesterday from our parent company, CATEX, which announced a joint venture with an organization called 3 Pillars Associates. 3 Pillars Associates is a consulting firm and a back office specialty outfit, largely composed of former Guy Carpenter personnel. Their principal is Paul Fox, who was the Chief Information Officer at Carpenter for a number of years. So CATEX is looking forward to working with them, and that press release can be found on the CATEX website. We'll now go to our main news. Renaissance Re in Bermuda is selling its entire U.S. P&C business that's underwritten through their managing general agents, its crop business that's written through Argo National, and its commercial property insurance operation to QBE. The price paid will be the GAAP book value at the end of the year. Today, that'll be estimated about $275 million U.S., and Frank O'Halloran at QBE is going to pay in cash. The transaction effectively represents all of RenRe's primary insurance business in the U.S., although Ren will continue to participate in the U.S. excess and surplus lines through its Lloyd's Syndicate 1458. RenRe Holdings CEO Neil Curry said, "We believe the time is right for us to exit in light of the relatively small scale of our U.S.-based operations in an environment that currently favors consolidation in certain U.S. insurance lines." They expect the deal will close by the end of the first half of 2011. QBE said the deal was expected to generate $350 million in gross written premiums next year, as well as a net profit after tax of more than $30 million. QBE CEO Frank O'Halloran said, "The acquisition is in line with our strategy of acquiring specialist business to further enhance our product diversification and distribution." Another scalp from Mr. O'Halloran. In London, Edward Creasy is stepping down as chairman of Kiln on January 1. Creasy is going to be replaced by Ian Brimcombe. Paul Hewitt is going to become the chairman of R.J. Kiln, the company. Brimcombe will become chairman of the holding company, Kiln Group. Kiln CEO Charles Frank said, "I'd like to thank Edward for his considerable contribution to Kiln, in particular for his leadership during our acquisition by Tokyo Marine." Brimcombe has been a non-executive director at Kiln since 2008. He has quite a resume. He's chairman of Equitable Life and Bluefin Group. He's executive chairman of financial institutions for Macquarie Group in Europe and Japan. He's a non-executive director of AXA UK, Philadelphia Consolidated, and Edelweiss Tokyo Life. He's also a senior advisor to Tokyo Marine. Hewitt has been an independent non-executive director of Kiln since 2007. He chairs the Audit, Risk, and Compliance Committee. Well, Ireland is moving closer to a rescue package. The Irish could receive tens of billions of dollars in a, quote, very substantial loan, according to the head of the Irish Central Bank. A team of international financial experts have arrived in Dublin this morning. The head of the central bank, Patrick Honohan, said talks with the European Commission, the European Central Bank, and the IMF today could lead to a loan being made available. He said, quote, "We're talking about a very substantial loan for sure, tens of billions, yes." This was in a radio interview. He also acknowledged that there had been substantial outflows of funds from the Irish banking sector since the spring. The team that's encamped in Dublin now will examine Ireland's financial situation amid fears that the country is set to follow Greece, which was bailed out earlier this year. Ireland's leaders have still not committed to accepting an aid package. They're concerned about how conditions attached to the bailout might affect domestic issues, such as its rate of corporation tax. It's one of the lowest in Europe. France has said Ireland may have to increase its 12.5% corporate tax rate in return for the assistance package. Higher tax countries, including Britain, Germany, and others, as well as the United States, but we're not in the euro, have long seen the Irish rate as a form of unfair competition. What's the insurance and reinsurance industry take on all this? Not that big a deal, at least if you're the biggest. Ireland's problems and its sovereign debt are not a concern for the insurance sector. This is according to Munich Re's CEO Nicholas von Baumhard. He said, "Ireland is predominantly an issue for banks. For insurers, it's not a concern." Baumhard spoke on the sidelines of the annual conference of the German GDV Insurance Association. He said the impact for insurers from Ireland would be similar to that of the impact from Greece, which was manageable. One of the reasons, he said, is the broad diversification of insurers' capital investments. He said, for instance, in Munich Re's portfolio, the fall in value of some government bonds has been more than offset by the rising values of other government debt. According to figures released with its Q3 earnings on November 9th last week, Munich Re has invested 3% of its overall government debt in Irish sovereign debt. Overall government bonds account for 46% of Munich Re's 174 billion euro fixed income investment portfolio. Most of their fixed income investments are in sovereign debt of Germany, the US, Canada, the UK, and France. Munich Re is the world's largest reinsurer. Here's an interesting story from the Washington Post today. The U.S. Chamber of Commerce astonished even the most jaded Washingtonians last year when it reported spending nearly $150 million in lobbying. That figure obliterated all previous records. It turned out that a lot of that money came from an injection of funds from the America's Health Insurance Plan lobbying powerhouse. That private insurers group gave over $86 million toward the Chamber of Commerce's media and lobbying blitz against President Obama's health care legislation last year, even as that same health insurance lobbying group was pledging general support for the idea of reform. According to the Chamber, those contributions supported the Chamber's efforts to advance a market-based health care system and advocate a fundamental reform that would improve access to quality care for all Americans. It was always clear that the American health insurance plans and the Chamber were united in fighting against Obama's health care plan, particularly a proposed public insurance option that would have competed with private insurers. However, the new filing that was released by information that came from the Internal Revenue Service shows the extent of the business lobby's alliance with the health insurers. The new information indicates that the health insurance group includes insurance giants such as Cigna, United Healthcare, and Aetna. A representative from U.S. Chamber Watch, which is backed by the labor groups, opposes the Chamber activities in lobbying, said, quote, "This news has caused the Chamber to give up the right to call themselves the voice of American business. They're the voice of the insurance industry." Quote, she went on to say, "Insurers give the Chamber $86 million to lie to small businesses about the benefits of health care reforms, and the Chamber didn't let their CEO friends down." Well, in the reform that came with the British elections, there was a significant change in regulation of insurance. The FSA is sort of going out of business. The Bank of England is taking over oversight of the group through some entity called the Prudential Regulatory Authority, the PRA. And here's the Bank of England's Melvin King. He said now that there's a very strong case for having someone with insurance experience on the board of the Prudential Regulatory Authority. That's good. King responded to a question from the chairman of Lloyd's, Lord Levine, at a House of Lords Economic Affairs Committee hearing yesterday. He said that that is a strong case, but that the decision ultimately rests with Her Majesty's Treasury Department. However, King did at least allay some industry concerns about the future regulatory structure by acknowledging that there were differences between the regulatory needs of the banking and insurance industries. He said, "We think, quote, insurance is not only extremely important, but also different from banking. There are very different types of institutions with different risks, and we'll have to take that into account. I accept that the Bank of England at present has neither the experience nor the resources to supervise insurance regulation." But he went on to note that we're going to inherit from the Financial Services Authority a strong team. My goodness. Stock market's up about 175 points. We'll go to a word from our sponsors.
You may have already seen the demonstration of the CATEX Global Exchange in action. Some of the features of the exchange and our Pivot Point 2 software are especially useful to facultative and excess surplus lines brokers and markets. Here, we see the opening page of the contract workspace, which shows some of the details of a facultative risk as seen by the listing broker. Behind this opening page are screens which provide details of the contract of certificate, details on the parties or markets on the certificate, details of the exposures on the certificate, including aggregate data of the underlying risks, details on each of the insured risks, policy or certificate documents, including document templates, as well as automatic email links. This screen also provides links to details of the layers for brokers, the at-risk markets, premium information, policy accounting statements, the policy claims history, endorsements, and contract documents. The Pivot Point system is the backbone of the exchange platform. Pivot Point provides easy input of data as well as seamless structuring of the data into policy documents, accounting records, and statements, as well as underwriting criteria. The system allows brokers to focus their efforts on where they bring their clients the most value added, determining the appropriate layers and selecting the markets which are appropriate for the risk and layer. In these markets, timing and access to data are especially critical. For example, in a risk involving numerous properties, a broker will likely have a data file listing the properties subject to the risk. The system allows brokers to easily upload data files to the system. The exchange allows brokers to offer the risk and make sure the data are available only to markets authorized by the broker. The exchange software automatically converts the uploaded data to structured data. Markets which are interested in reviewing the risk can easily use the data to underwrite the risk. We are working on providing links to a third-party risk assessment firm which will be able to provide property-level risk of loss calculations. These are only some of the features which make the CATEX Global Exchange and our Pivot Point system especially useful to brokers and markets in the facultative and excess and surplus lines business. Please contact us for a demonstration of all the advantages you can get from the CATEX Global Exchange and the Pivot Point system. CATEX, an unfair advantage unless you are trading with us.
Well, we'll give you an update now on Qantas and Rolls-Royce. Qantas is saying now that half of the global fleet of A380s using Rolls-Royce turbines may need their engines fixed to replace a faulty part. That's the part that blew out after takeoff from Singapore earlier this month. Rolls may have to remove as many as 40 Trent 900 power plants from the A380s to replace a part that led to the explosion on the 4th of November. Qantas' CEO Alan Joyce told this to reporters in Sydney earlier today. Each A380, of course, has 4 engines. There are 21 A380s in service with Rolls-Royce turbines. Joyce didn't say the time frame that's going to be needed to make the switches, but he did note that they continue to ground their entire fleet of 6 A380s since the Singapore incident. Singapore Airlines and Lufthansa have switched some engines on their A380s. Airbus said today that it's going to press Rolls-Royce for full financial compensation caused by the disruption. Airbus's CEO said last week that A380 deliveries may suffer next year. An academic professor at Central Queensland University in Australia said this is basically an engine recall. It must be a big worry to Rolls if they're taking so many engines off. Rolls said that they're going to miss